Hello everybody, this is Mike Prey with Keller Williams Realty with your market update through November of 2023. Well, it's beginning to look a lot like Christmas. You may have noticed I'm in short sleeves today here in DFW in North Texas. The temperature is projected to be 79 today, which isn't very Christmassy, but we're gonna celebrate Christmas in any event. Also, as we're getting toward the end of the year, we had some interesting developments last month. The state of the market is in flux. It is very hard to predict anything that's going to go on, but a couple of things that might be interesting to you. Interest rates have fallen, and we'll talk about that in a second, but interest rates have fallen still a little bit more, and they are projected to fall even more as we go into 2024. And so if that does occur, what should you do? What does that mean to you? Well, an interesting statistic is that in the DFW area, there are 10 buyers for every home available. So that means there's a lot of demand out there, and some of that is pent up demand because a lot of these people have been held back or priced out of the market with the interest rates. As the interest rates drop, these folks will re-enter the market and begin to compete for the few homes that are available out there. Prices are continuing to go up. Inventory is still low. It's grown a little here at the end of the year, but it's still very low. And so there will be fewer houses out there and more people competing for them. And what we've seen happen with that historically in the past is that continues to push prices up as people compete for those available homes. So there's a lot of pent-up demand out there, and interest rates going lower will spark those folks to enter the market. So if you're a buyer, it might be a good idea to go ahead and get in the market now. While prices are still holding steady, they're continuing to climb. So waiting will continue to cost you. And also you might be able to get in before this competition starts and pushes the prices even higher and makes it more difficult for you to find a home in the low inventory market. If you're a seller, you're going to start seeing more and more people get into the market, so it may be a good idea to start getting your home ready to put out there if you're needing to sell, or if you're wanting to sell, or if you're wanting to take advantage of the equity that you've built up. So anyway, that's what we're looking at as we're going into the first of the year if the projections hold true. Now, what's happened through November? Homes sold were really flat. We're starting to see some seasonal activity. The homes sold were flat, but for the year they were down 21.9%. That's a function of high interest rates, kind of holding some people out of the market, and also just a function of the low inventory that we've been seeing that increases to reduce as we go on. New listings, this is a number that we don't usually talk about, but they were off 34.7% month over month. So between October and November, the new listings, new homes put on the market was down 34.7%. Now this is a little bit seasonal. This happens almost every year at this time. But that's a fairly large number, maybe a little larger than we normally see. They are down, new listings are down 19% from last year, to give you an idea of how the market is trending year over year. The months of inventory that we talked about, this is an interesting number because it's a function of inventory that's already on the market. And we know that that's low. But at the present rate of sales, the months of inventory is 4.19 months of inventory, which is up about 0.54 months over last month. So it first glance might appear that means there are a lot more homes out there on the market. I don't think that that's really true. The actual numbers don't bear that out. But what it means is that the inventory that is available and the rate that it's selling right now, if we didn't put any more homes on the market at the current rate of sales, it would take a little over 4 months to sell all the inventory. For the year, it's up about 0.71 months. Last year at this time, we had 3.48 months of inventory. And we will see that number change as people come into the market, as the interest rates go down, if that does occur. Days on market, that's how long is it taking to get those homes under contract, is down actually faster in November than it was in October. It was 13 days faster. It took an average of 33 days to get those homes under contract. Last year at this time, it's a lot faster than last year. It was taking, it's 25 days less than last year. It was taking 58 days to get homes under contract. And what that tells us is there are people out there that are wanting to buy homes. If you put a home on the market, it will sell. It's not going to sell in 2 days in most cases, or it might. We are seeing some of that, but they're going at a fairly brisk pace. If the homes are on the market, that means there are people out there that want to buy. They're looking for homes and waiting for the right one to come along. The median sales price was kind of weird over the last couple of months. It took a little bit of a spike a couple of months ago. Then it went down in October, back up in November at $379,000 for a median sales price. Last year it kind of did the same thing too, except it spiked in November. It popped up to $427,000 as a median sales price, but then it dropped in December. So that's really kind of an odd number. But the overall trend is that the prices are holding steady to going up, continuing to rise, and that's once again a function of the demand out there and the low inventory. Mortgage rates actually dropped 0.57% in the month of November, and they ended the month a national average of 7.22% for a 30-year fixed mortgage. Right now, I'm making this video in early December, obviously. Wells Fargo is quoting 6.5%. That's on a 6.86 APR, so there's some points involved there. But Wells Fargo is quoting rates under 7% now, so we're starting to see some of that float down in the interest rates. Well, that's our report going into the next year. It should be interesting. We're anticipating that we'll have some more activity, a little more favorable market for the buyers as far as interest rates are concerned, which is also good for the sellers. I want to wish you all a Merry Christmas and thank you so much for referring your friends and family to me and for contacting me with any of your real estate questions. I am so happy to help you, and I hope you have a wonderful holiday season, and I look forward to talking to you again next month. If you need to contact me and find out about what's going on in your area or with your particular home, what does your equity look like in your home? What is your investment looking like? Please feel free to give me a call at 469-446-0234, or you can email me at mikepray2@gmail.com. If you're seeing this on social media, please message me or send me a message, and I'll be glad to answer you. So once again, Merry Christmas everybody, and we'll see you next month. Bye.